Ken Boyd, the owner of St. Louis Test Preparation. Here's our website, stltest.net, where you'll find the dummies books, tutoring services, and links to all the videos. It would be a big help to me. On all the pages of the website, just about, you'll find a survey, 7-question confidential survey on the services we provide and what you might need. If you could take that survey, it would be a big help. So what I'm covering today is a segmented income statement. Very common question I get a lot, where there's some assumptions made and then costs and sales change because a division is closed. So we have 3 divisions: system A, B, and headset. Sales less variable costs equals contribution margin. We have fixed costs, and then we have operating income subtracting fixed costs. Now, we find out that total fixed costs include common fixed costs, which are shared among all divisions in one way or another. Think of them as home office costs. In this case, it says the fixed costs are allocated to each product line in proportion to their total revenue, and the common fixed costs are $18,000. So the first challenge is we've got to calculate the common fixed costs and pull that out of the fixed cost total. So I look at the percentage of revenue for a division, and then I multiply 18,000 by the percentage of total revenue, and I get the allocation of the common costs, totaling 18,000, which is the number I was given. We then have other costs that are direct fixed costs, that are fixed costs only for a particular product line. Since the total fixed costs are 30,700 and the common costs are 18,000, the remaining amount, 12,700, must be directly to each product line. So here's how I figured out the direct fixed costs for System A. It's the total less the common costs, and I get direct fixed costs just for that product line. So then I set up this format of an income statement based on the data I had put together up here. You'll see here's common fixed costs, and here are those direct fixed costs. Then I put it in a segment margin format, which means we have sales less variable costs gives you contribution margin for System A. But then we subtract the direct fixed costs that only relate to System A, product line, and we get a number called segment margin. This is the contribution margin just for that segment, the contribution to profit. Then we subtract System A's share of the common fixed costs, and we get down to operating income for segment A. This method helps the manager see what the profit is just for their division, and then what the profit is after their allocation of fixed costs, because the manager can be allocated on both numbers. Then we have a product change. Management decides to drop System B. System A sales goes up 30%, which means that their sales and variable costs change by 30%. Headset sales drop 25%, which will affect both sales and variable costs. So for System A, I essentially multiplied sales and variable costs by 130% to reflect the 30% sale increase. System B, I'm assuming that the sales and variable costs and System B's direct costs go away. I say that right down here. But then I also have to take the 18,000 in common costs and reallocate it between A and B, A and headset, based on their percentage of the new revenue number. So that's what I do down here. For example, System A's revenue is 91% of that total, so they get 91% of the $18,000 cost allocation, which is linked to the 18,000 up above. You can see that I add a cross, and all the direct costs are now reallocated. So what I do down at the bottom of the page is I set up the new segment margin format showing the higher sales, the direct fixed costs, which are the same as the analysis above, and then common fixed costs, which are larger because now A has to get a bigger allocation of the common fixed costs since B's business went away. So, in terms of a manager decision, we can see that the total segment margin profit was $6,100 when we had System B open. When we close System B, we have a $16,558 profit in total, which is over $10,000 higher than the $6,100, which tells us that it was the right decision to close System B, lose all those sales, but get rid of those costs, reallocate the common costs. We're better off by about $10,000. So what we just did here was, this is a segmented income statement where the costs and sales change. Some of those assumptions change. That's as far as we'll get right now. Remember that on the website, stltest.net, we have links to all the books, details on the tutoring services, links to all the videos, and as you'll see on all the web pages, I'd love to get your 7-question confidential survey results, which would help me find out what you need. Thanks very much for watching, and we'll see you next time.